What's going on, brothers? Welcome back to Brotherhood Finance. In today's video, we have, of course, who you know, our special guest, ColeNichter, the other CEO of Brotherhood Finance. In today's video, we're going to be breaking down if we are currently in a recession, where the housing market is, the stocks, the equity market, how you can benefit, everything you need to know, and a multitude of other topics. Before we dive into this video, make sure to smash the thumbs up button down below. Subscribe to our YouTube channel if you have not already done so, and leave a comment down below of all this knowledge, wisdom, statistics that we dive into. What is your opinion? Do you think we're in a recession? Where are the markets moving forward? And how can you prepare? What is your opinion on that? Furthermore, let's dive into this video, this podcast right now.
How's it going?
Pretty good. Cole, how are you doing, sir?
Good, man. It's a great day when you're on another podcast and I can do it with you. So let's dive right into it. And I think, the most important question, we can start off with, is, are we in a recession? First off, I want to kind of dive into, what is a recession? I think, you can give the prime example to people. What is a recession? What do we look for to be able to classify us as in a quote unquote recession?
Yeah, so there's a couple things I like to dive into, and I think this is, really one of the most important topics to cover right now, given the current economical factors that we are in. We're in a very uncertain marketplace right now, and some of the things that I really look at to see if we're in a recession are, first and foremost, as we have addressed in other videos, the GDP, the gross domestic product. So in the GDP, they report that 4 times a year, every single quarter. And they just released the GDP for 2022, and we had a negative GDP of negative 1.4%. Now, what signals when we're actually in a recession? That is 6 consecutive months of negative GDP, or 2 quarters. So when we have another negative GDP in this next quarter, which I think we will, that is going to signal that we are officially actually in a recession. Now, on top of that, we have rising interest rates. Due to inflation, or CPI, Consumer Price Index, which is what measures inflation, at around just 8.2%, which they released yesterday. So that's important to keep in consideration. With the inflation being, unstable, out of control, and really hyperinflation at this point, the Fed is going to continue to have to increase interest rates, which is going to make other asset vehicles like the equities market or the stock market and like housing more, unaffordable to buy and harder to get in and less attractive, because people are going to want to save more money. That way, they can buy the assets when the interest rates go down or when the market continues to slide. So I like to look at, how is the housing market doing? How is the stock market doing? Is the stock market below a 20%, signaling that we are officially in a bear market? And are they continuing to raise interest rates? Are people starting to get unemployed, which I've seen Facebook has had to start to lay off people. And, some of these other companies were just at the beginning stages of, what I think we're already in a recession, but a lot of people don't understand and interpret until really it's too late. And we see these markets further continue to downtrend.
And honestly, as well as anybody, no one can predict the markets. Nobody can tell you exactly when we're going to hit the highest peak of the recession. But what we can tell you is that the recession that is going to occur could be massively more damaging than ever before. And I think Mr. Cooper will go into right now about how, looking at the past history and how history repeats itself and what is different now than when it was back then, if you would like to go into that.
Yeah, 100%, Cole. And, there's a lot of different economical factors that we are having right now. So like if we compare to 08 or 09, typically we're supposed to have so-called a bear market or a recession every 8 to 9 years if you look at history. In 1929, we had the Great Depression, which was about a century ago, so 100 years ago. And if you look at the cycles, Ray Dalio really goes into it. He goes into the rise and the fall of economies, and he talks about it. But really, I think the problem is much worse than a lot of people anticipate. Now, why do I say that? Well, in 08 and 09, the Fed injected $850 to $900 billion roughly to get us out of that housing market crash in the last recession. Now, when we had coronavirus occur, they injected roughly $7 to $8 trillion on their balance sheet, injecting that money into the system to prop us up to prevent us from having a big crash. Now, we had that 40, 50% or around 30% decline due to the 2020 COVID crash, but we had that quick and very substantially fast rebound due to the injection of money. Now what is happening is we're actually seeing a real economic slow and the slow of growth that's actually, normal to market conditions over longer periods of time every 10 years. And not on top of that, with the Fed injecting all that money, they are continuing to pull money out of their balance sheet. So all that $7 to $8 trillion, a substantial amount of that money went to people's 401ks, into the stock market, into the equity market. And now what the Fed's having to do with raising with the high inflation, they're not only having to raise interest rates, but they're going to have to move money off of their balance sheet in the stock market, which is just going to add fuel to the fire of the current market conditions we're in. And when I'm talking about the market crash, I'm not only talking about in the US, I'm talking about in other countries as well, such as China, when they're having slower economic growth and lower GDP. And, really just a lot of countries. And as we've seen in 08 and 09, it's not only in the US, it's in other countries as well, because we have, this substantial problem that's occurred. And I think, we're just at the beginning stages of it.
Yeah, not only we're in the beginning stage of it, it honestly has started just even a while back. I mean, we're talking about we're getting less oil, we're getting less, things transported onto us by other countries and things like that. And that, believe it or not, has an effect on how our economy
Oh,
over
yeah.
does over a period of time. And when you're talking about, a recession, yes, we've given you and explained to you the GDP, how that's such an important factor on, determining whether or not there is a recession. Now, a recession is a word that you cannot just throw around. You have to have, proof of it. You have to have, evidence that is the X, Y, and Z are happening. We talked about what a recession is and how it's going to affect the economy. Let's talk about how can we benefit from a recession. As somebody watching this video, what can they do right now that will help prepare them for this upcoming recession?
Yeah, Cole, you're providing, very valuable input and questions. And, I want to dive back to something you said prior in the video. And that was, we know even if a recession doesn't happen this year, a recession is inevitable. That is one of the three rules we talked about on how to make money in a recession. And some of those other rules are the market will always bounce back. The rest of the recession is inevitable. And, it's really important to have that frame of mind. How can you benefit, Cole? That is a great question. And really, it's the opposite of what most people think, and that is investing right back into the same very economy that you are currently in. So you want to not have a lot of debt while you're in a recession. You want to have, good capital, or a war chest, as I like to say, liquidity or cash on hand. That way you have money to deploy when the asset vehicles are down, and you can buy low and sell high to increase your return on investment. But it's important, to stay out of debt if you can, to have capital on the side, to have a good credit score if you want to buy properties, and really get out loans if you're able to do so during these crashes. But a lot of people don't understand is a recession is really one of the best times to create the largest transformation of wealth for your history and for your legacy, because you're able to really get the best deals in the marketplace than ever before. And as I just mentioned, they're not very common. So it's important for you to prepare and then be able to execute when it occurs, because you're only going to have a couple of them throughout your lifetime. And you never really know when the next one's going to be. So I agree 100% that, you need to prepare and you need to have the right frame of mind.
Yeah, and it's crazy how many people tell you, like how to prepare for a recession. They tell you they tell you how it's coming. They're giving the information in your front eyes, but everyone just decides to just throw that on the back burner. They decide they go, oh, it's going to be a great Friday weekend. Let's go out and let's spend $200 at a steakhouse. Let's go drop $300 at the bar, whatever it may be. You are feeding the economical factors, and you're not sitting there and thinking about, okay, how am I going to prosper from when this recession does come? Because you mentioned building capital and having that, money set aside to be able to buy when these things occur is a massive, massive point that you have to get across. Because if you're going out and burning everything and living paycheck to paycheck, what's going to happen when this recession does hit out of the blue, and you're sitting there and you're like, damn, I don't have any money to throw back in the market. Brotherhood Finance has been told me for the last 6 months that a recession is going to occur, and now I did everything that they didn't do. Well, that's what people want you to do, because like Brennan said, and he just mentioned it, a recession is a way that you can build the most generational wealth in the shortest amount of time. And you only have maybe 2, 3 tops in your lifetime. We're not talking about just inflation right now. We are talking about hyperinflation. The difference between hyperinflation and inflation is just the value of money, increasing and increasing. But because we are in a quote unquote hyperinflation market right now, we are printing more money. The economy is getting pushed more money, like the stock market's getting
Yep.
flooded with cash, getting flooded with money to keep it afloat. What happens when these big time, retail stores, all these things has to pull back from that and they can't push in the market? What's going to happen? It's going to crash.
Right.
And we're already noticing a downtrend. We're in
Yep.
a bear market right now in the stock market. And I think that's a great place to start. Let's start with stocks. What are you noticing, Mr. Cooper, in the stock market that, is just screaming at you recession?
Yeah, so I mean, if you look like you were saying, even just real time and how businesses and small businesses especially are doing. Grant Cardone mentioned it. He's going to local shops, retailers. People are starting to buy less goods and services. Bottom line. Now, why is that? That's for a multitude of reasons. Not only because 76% of Americans live paycheck to paycheck and have less excess cash, but also because the Fed stopped printing all this money, and now they're having to taper their balance sheet and pull money out of the market and not give people stimulus checks. We're seeing price of goods and services increase. Like I said, the store is starting to cost more money. So you want to get groceries. Gas is going to substantially high. We have the oil pipeline that he shut down. We have just a lot of factors. He's cutting, Mr. Biden's cutting off some deals that we had in the oil market. So that's also raising the price of gas.
And
And these are things that, really add up over time that a lot of people don't think about. I based on the stock market though, Cole, to go back to your question, is the average portfolio right now alone for the individual investor is down at least 20%. And we have certain markets right now that are down 20, 30%. You have the NASDAQ, the Dow, the S&P 500. These markets are all down anywhere from 18 to 30% already. If you study '08 to '09, it was typically each one of them were down anywhere from 50 to 60%. So don't get me wrong, we've had a lot of pain, we've had a lot of hurt, but that doesn't mean that the end of the pain could be over. But it's important to keep that frame of mind that you need to do the opposite of your psychology. You need to understand that when everybody's looking at you questioning, why are you buying into this market? Why are you holding? Why are you not getting out? It's because you know one key rule, and that's the market will always bounce back no matter what. So you're able to get in, you're able to get those good deals, you're able to finance, and you're able to increase the assets that you own. So that way, when they do go back up, you increase your return on investment.
yeah, I think, like we said, it's, May 13th right now, and we've been warning people about this probably for the last 4 to 6 months. We're
Yeah.
not hey, we just got on board with the whole quote, oh, it's a recession. They don't know what they're talking about. If you go to our past videos, we've been talking about this for 4 to 6 months.
If
What,
not longer. Yeah.
if not longer. So what I'm going to say is you were talking about how, basically you have the stores that are struggling. You have people that are struggling. They're living paycheck to paycheck. 76% of Americans do, like you said. You're also not including, the retail shops. They have to pay taxes. They have to, pay all these for even to get the goods and services in the store. So you're
Yeah.
talking about not only labor going up because of minimum wage, because people voted for minimum wage to go 15-hour, but you're also talking about, the products of goods and services going up. So people's just net income or the net revenue is just down, and they can't afford to stay open. And if they do, they're going to go bankrupt. Now, what you were talking about with the stock market and what I really wanted to, represent is we've been talking about this for 4 to 6 months now. You and I have both been on the sidelines for about 2 to 3 months now. And, we told people, we said, you might want to get out. You might want to do this. We're a financial education company. We can't tell you what to do. We're not financial advisors.
Right.
But what I am going to say, and I'm going to tell you is if you are in the market right now and you have lost, 6, 10, 15, 20 grand, like Brendan Cooper said, 20% of all the investors have lost money already. Stay in. You know the three rules.
Yeah.
One of the rules is the market's always going to bounce back. Yes, it's going to hurt right now, but guess what? If you have been building your war chest like we have been telling you to do over the last 6 months, and you keep throwing in just a little, just a little, just a little, at one point you're going to throw it in at the all-time low and it's going to bounce back, right? So,
Right.
and then those are going to recover in each stage you've been throwing money into. So what I tell people is if you're already in the market right now, Do not pull out. And another mistake that I see people make all the time is they go out, then they go
They
back in,
get in.
they go
Yep.
out, then they go back in. And it's just like, dude, what are you doing? It's,
Right.
you know, I think you can talk about it more than I can, but it's just about, the key factor of the market will always bounce back. And, long term, if you are trying to short end these stocks and trying to guess what it's going to do, you cannot do that right now.
Right.
And
You
if
can
you're a
never
day
time the market.
if you're a day trader, 95% of day traders lose money every day. So, not only that, the money that you do make, you got to pay double capital gains tax on it because you didn't hold it for a year. So now you're talking about a whole different aspect of games to where, oh, congrats, you gained, let's say $2,000 that day. Well, guess what? You just lost 40%. So, you know what I'm saying? It's kind of one of those things like it's a lose-lose right now. So I guess the next question I have, let's talk about a bit about the crypto market. It's
Yeah.
obviously May 13th right now. We saw Bitcoin drop to 26,000 yesterday.
Yep.
Unbelievable, man. We
It
haven't
is,
seen
man.
Bitcoin to 26,000 in a while. What is your, educated guess based on all the research and breakdowns you've done? Where do you think Bitcoin is going, and what are we supposed to do in this crypto market right now?
Yeah, crypto is a very new asset that I feel like a lot of people overthink or may not be as informed about. Before diving into where I think the price is going to go, which is very tricky, and because that is based on a lot of economical factors. Now, when you think about crypto, there's really two main things you need to keep in mind. One, or maybe even more than two. One, it's a new asset vehicle. Two, it's more volatile, which then makes it more speculative. And with the volatility, let's say we're already in this recession and it continues to go down. Cryptocurrency, matter of fact, most people don't know this, has never actually been through a recession. We've seen the bear markets where it drops 80, 90%. Again, it's not because the asset doesn't have value. We talk about the intrinsic value of each asset, such as Bitcoin as, being a finite amount at 21 million, around 19 million mined. It has that kind of gold outlook. We've talked about Ethereum, how it's, on the blockchain, how new cryptocurrencies are built off of it, how there's NFTs. A lot of our audience that's been around, we've already gone in and dived into a lot of these cryptocurrencies. But, based on the market, you need to understand that in market conditions that have a lot of uncertainty and maybe even that, are on the downward spiral, what I've noticed recently, Cole, is a lot of people used to have that mindset of, crypto is, it's like the gold, it follows gold. It has that finite amount, and it's the opposite of inflation. When inflation goes up, Bitcoin's going to do well. But if you look recently, what we've actually found is cryptocurrencies actually following big tech stocks. So when big tech is doing bad, which by the way is amazing to me because crypto never until up to this point has correlated to a single asset. It's always kind of done its own thing. People have said that it's the inverse of inflation. So when inflation's high, Bitcoin will do good. But what we're starting to realize is that's not necessarily true. But what is true is crypto has never been through a recession. So we've seen these huge bear markets throughout history in cryptocurrency, but we've never actually seen it through a recession. So as far as cryptocurrency goes, it could go below 20,000. It could, I think, another good resistance points are 21,000 and 27,000, which is, it had a pretty good resistance around 27,000. I think it's around 29,000 right now. So it needs to break up above that 32,000 mark if it wants to hold stability and maybe head higher for a resistance mark. But, keeping that in mind, and it goes back to what you said, Cole, for any asset, for real estate, for crypto, for investing, is you could never time the market, and the market, is always going to bounce back. So what I tell people, again, this is not financial advice, this is financial education, is you can't go wrong with dollar cost averaging. And if you're already down and you're in these markets, and let's say you're down 20%, like the average investor is right now, if not more, don't sell out. There's no point. You're already down a
Yeah.
substantial amount of money. Continue to dollar cost average. Don't throw all your money in at once, but dollar cost average into the asset. And, something I really, Cole, what you were talking about earlier with investing is I think investing is 80% psychology and 20% your intellect and your knowledge in the market. I really do, because it all comes down to your psychology. You need to do the opposite of what most people are doing. That's how you're going to be successful in any asset vehicle, is really understanding it and knowing that it's going to bounce back and be able to get in and get out at the right times. So, having a war chest, being able to deploy that cash, and those methods are all something important you need to keep in mind for crypto, for real estate, and for investing.
And just something to just top that off real quick. We talk about a lot of things on Brotherhood Finance. And one of the key things that I think people are misunderstanding, and you've seen this multiple and multiple times. How many YouTubers, how many TikTok people, how many Instagram people do you say, oh, you see Shiba Inu going to the moon, you see,
Yeah.
Dogecoin going to the moon. Just because somebody is telling you to invest or, guide your money into a certain asset vehicle, whether it's stocks, whether it's crypto, whether it's real estate, we preach do your own research.
Yep.
We will give you the platform, we will give you the platter on a plate in order for you to succeed at the highest level with the maximum ROI. Now, whether you eat that plate or not, that is up to you. But everything that Brendan Cooper has predicted has happened in the last 4 to 6 months has happened. And it's actually astonishing how much information he can withhold and deliver to you guys. And I'm not even going to lie to you guys. I have bought the $5,000 programs. I have bought the $10,000 programs. They say the same stuff we are saying, but we're giving it to you for free. So if you found value, make sure to smash that like button. It only helps us out a little bit, and I appreciate all the love and
Yep.
support. But getting back into it, let's kind of, we dived a little bit into the crypto, we dived a
Yeah.
little bit into stock. Let's talk a little bit about real estate, right?
Yeah,
So,
Cole, I
as
wanted
we,
to ask you,
yeah,
as you know, first off, congratulations, man. I mean, Cole, if you guys don't know, the other CEO, he just became a licensed real estate agent in Florida. So if you need to sell any houses or anything like that, make sure to reach out to my man, ColeNichter. Very professional, very knowledgeable dude. He understands the real estate market like no other. Immense and very great communication skills, and he can get the deal done. Cole is a go-getter. He will list it, he will sell it, he will find the buyer, and the transaction will be done in a speedily and orderly fashion that is very professional. So, just you give a big shout out to you, Cole. I know
appreciate
you worked very hard,
it.
you got your license, and I think the sky is the limit, brother, and you're killing it in your industry. But yeah, going back to that, what are you seeing in real estate, as a licensed real estate agent for EXP? Where do you see it going? Or what is really the market conditions like for you in Florida right now?
So right now, as we speak, in as of May 13th, the market conditions are starting to slow down a little bit. You're starting to see a lot of the homes that, sold in 1 or 2 days are starting to slow down. You're seeing a lot of people also, for an example, like FISBOs, which is for sale by owners. Those are actually moving at a very slow rate. See, there's a multiple issues with the real estate market right now. One, you have obviously, as we all know, they just raised the interest rates. We're at a 30-year mortgage period. You're up to a 5.1% APR rate.
Wow.
And it's actually crazy because I mean, you guys, you might not think, oh, 5%, that's not that much, but you're talking about people that purchase, half a million, $1 million homes over a 30-year period. That is a lot of cheddar. So, what I want to say is, about the real estate market is everything is going up. And then this all goes back to what Brennan talked about with when Grant Cardone posted a video that's saying, he was in what was he in, Cuba, or he was in somewhere, about how he sees shops that are
Yep.
struggling. He sees all these different things that are struggling. It's because the rent of these places of commercial real estate is huge, because you're talking about, somebody that owns that complex that says, oh, damn, we just gone up more. He has to pay more, to his landlords. He has to pay more for the people in there. And he still has to profit the same money. If he wants to profit the same money, he has to raise the rents. That's the bottom line.
Right.
We are going through hyperinflation right now. What is the key asset? And I'm telling you right now, it's real estate,
Yep.
multifamily unit real estate. I'm telling you, uh, basically right now you have Airbnb, which is a great, great, great tool that people can use. But I'm telling you, in the next year, Airbnb is going to slow down. If you have those single family units and you have them as Airbnbs, I would highly recommend changing those over to a single family tenant, because Airbnb, people are not going to be vacationing like they used to. When this recession occurs,
Less disposable income.
people are going to save their money. They're not going to spend it. They're going to hoard their money. And guess what happens when people don't flush money into the economy? The economy goes down. So now you hit a double dinker effect, right? So now you got real estate slowing down, which, by the way, real estate is also one of the key aspects that are keeping the market afloat right now, because we're in a seller's market, which basically, for an example, if Brendan Cooper went to purchase a house, he's probably got 8 other offers But what I've noticed over the last 2 weeks is it's slowing down. You're not having those 8 offers on one house. You're having 2, 3 tops. And I'm telling you right now, it's going to slower and slower and slower. And people that are selling their house for sale by owner right now, I'm telling you guys, just as a word of advice, I know you guys do not like realtors, but you will not get the exposure on a house to be able to sell it. You guys are talking about pennies at closing costs. I'm talking about getting you thousands of dollars extra that even covers the closing costs. So you have a house, for an example. I saw one the other day. I'm not going to give any details. That was listed for $795,000. It's been on the market for 185 days. Beautiful, redone, all done, beautiful. And it's sitting on the market. If that person used a realtor, I guarantee you that would be off the market in 5 to 10 days. But because they don't know how to solicit, because they don't know how to advertise, you're going to all these things that are, it's just going to screw you in the head. Because let's say you wanted to move. Let's say Brendan was selling a house. He did it for sale by owner, and now he wants to move. Well, guess what? In the last 90 plus days that your house has been on the market, the APR has gone up. So you're losing time. And time is our best asset. And we preach that day after day. What you do with your time, you can never get back. Money you can get back. And I'm just telling you guys right now, if you build that war chest and you save and you don't go out and buy that Gucci belt, you don't go out and, buy that $200 dinner. And, you got to look at it as, for a business standpoint. I know I do, and I'm sure Brendan does. Every time you're thinking about getting, purchasing an item, whether it's, in the store, whether it's going out to eat, you're thinking, for me at least, wow, I could really be holding this to help me down the road. And that's the business mindset that people have. So maybe instead of going out and buying that Gucci belt, hold on out of that. Because I'm going to tell you one thing, if you have the capital to be able to go buy assets later in this recession, dude, you're going to get so much money back from your tenants, from, that passive income that you're going to receive. And then that passive income can go out and buy you all the luxury items. If you want a car, if you want a belt, whatever, sunglasses, whatever, any liability really that you want. Or you can use that money and buy more assets. And the crazy thing about it, guys, and it's amazing how real estate works. So what we plan to do, can I talk about this? I'm going to talk because it's in a lot of videos. What we're going to do when the recession hits, we're going to allocate capital. We're already been stacking in, our war chest. We're going to allocate that capital, throw it into a multifamily investment property. We're going to let that sit on 3 to 4 years, maybe even 5, let the market bounce back. Because if you remember rule number 2, the market always bounces back. So once we do that, right, and the market bounces back, what we're going to do is we're going to take that money out of that apartment complex and take that money, refinance, and put it towards a bigger complex. And then guess what? We're going to sell that complex, do a 1031 exchange. And now taking the money that we bought from that complex, we just doubled or tripled the size of our complex in just 2 signatures. It takes 2 signatures.
Yep.
And it's crazy how, real estate works and how everything's going. But this goes back to what we started in the beginning. Build your war chest, know how to fight inflation, and do your research. And if you guys want any other research, make sure to go check out our playlist down below, our training videos. You'll see a bunch of podcasts. We even have a podcast if you want to go more in depth about real estate with Tyler Bussetti, multi-millionaire.
70 million it was, right?
Yeah, he's up to $75 million a real estate portfolio right now. So make sure you guys go check out that video. The link will be linked right at the top in the icon. Make sure you guys go check that out. But diving back into it, what investments can you make in the crash that is going to, I guess, that, maybe for some people are a little safer route. And, for people, you have people, I like to explain it this way, is you have 3 different type of drivers. You have the driver that goes below the speed limit, which is a safe investor. You have the driver that goes the speed limit, the driver that, he could go both ways. He has the diversity in his portfolio both ways. And then you have the driver that goes 10, 15 over. And those are the ballsy investors, right? Those are the investors that are looking to make that quick money and want to get, their most for their ROI, but are the most risk at board. What do you suggest somebody does when it comes to a recession? Are you going a little risky, or are you going more the safer route?
Yeah, so I think it really depends on the individual themselves. And before I dive into that question, Cole, that's a phenomenal question, by the way. You greatly elaborated on real estate and everything. So I really do appreciate that, spitting all of this knowledge and information to our audience that is very helpful. And really, it's really hard to find unless you want to pay hundreds of dollars for a class or for a membership. And, that's why Brotherhood Finance is different from other channels. We tell you that, how it is. We spit facts. We're not trying to sell you anything. And we're just, we're here for you, trying to help out the brotherhood, trying to help the brothers. So if you've not done so, again, as Cole mentioned, make sure to subscribe. Make sure to smash that thumbs up button. I really appreciate all the support, and check out some of our other social medias. But Cole, diving back to what you were saying, you're talking about how don't buy that Louis Vuitton belt. Don't go buy that Gucci. And that's why I tell people live off your passive income. That is how you're going to create financial freedom, because all these people, they want to, have the look, they want to go buy those items. And I won't elaborate on this too long, but what you should really do at the beginning, if you can, is try to lower your expenses, increase your income, and then create passive income. Because as we mentioned, passive income is not taxed. So use that passive income to then go buy the car you want, to then go buy, the Gucci belt. That way you're still able to have those assets, and you don't have to pay a huge capital gains tax, and you don't have to use your disposable income. But as far as what you can invest in, I think number one, it goes down into what is your passion. What do you have a passion for? And what do you believe in? So when we're talking about stocks, you're talking about the low risk, the medium risk, and the high risk. So in my opinion, how do I diversify those three? So first off, on the high risk, we have small cap stocks. Okay, so we have smaller companies that are being beat down in this recession, but could have huge growth in the future.
Are those OTC stocks for people
Yes,
that are
yep, those
wondering?
are OTC stocks like Planet 13, like Tattooed Chef, like Oatly. They're very more speculative investments, but if you like the team, you like what they're doing, you think they're going to do good long term, you could have substantial gains going upside.
Can you kind of dive in before you dive into the rest of what you were going to say? Can you kind of tell people, for maybe people who don't know, what does it mean by speculative?
Yeah, so speculative is just like crypto, right? Crypto is a speculative asset. You don't really know. I mean, I look at it, and I know me and you, Cole, both have a great understanding of it, and we look at it as the internet of the 1980s. We know we had Web 1, we had Web 2.0, and now we're going to have crypto, Web 3.0, which I think is going to be, a huge disturbance, and really, really take over the financial atmosphere moving forward. I really do. Maybe not right now because we're in a recession, but I think after we come out of the recession, if we are currently in one, that we're going to see massive upsides, gains we've never
Agreed.
seen before, like after the dot-com bubble, and after we had the internet. But diving into what is a speculative asset, it's more of a riskier asset that you really need to understand to a great degree to succeed. And that's what we talked about before. 95% of day traders, as you mentioned, don't even break even. They lose money. And it's the same thing when you're talking about these small caps. You need to look at their financials. What is their PE ratio? Do they have a positive revenue, or are they at least moving towards it? A lot of small companies don't. So you need to look at, you need to listen to their conference calls. Do you trust the team itself? Do they have experience? So these are some important things to look at. So a smaller cap stock, normally an OTC stock, which means you have to buy it from a certain exchange because it's still under that $5 mark, which considers it as a penny stock, believe it or not. Those are more speculative assets. Now, if you're looking for a median gain, you can look at something like just investing in the overall market overall. So you could buy, like certain equities, or just buy like a fraction of the S&P 500. So like the VU, I really like the VU. That's a good one. Those aren't going to be, huge profits or huge losers, but they're going to be in the middle. They're going to give you those average rates of returns and that return on investment of anywhere from 8 to 12%. And that's going to compound over time. We're very young. It's important to understand that time, like as you said, Cole, can be your best or your worst asset. And that's really not going to depend on if you're watching this video. It's going to depend on if you take action, you actually utilize the information that we preach, and we want to see you succeed here at Brotherhood Finance.
Yeah, and one of the things that I've noticed, and I don't know if it's just I don't want to say someone that's a little older, but people in their late 40s, people in their 50s, and even 60s, and Andrew really harped on this. Andrew Tate, he's like, you got to realize you guys got 20, 30 years left of your life. You guys are not old. Like,
Yeah.
it's those things where it's like once people think they hit 45 that they're done. Like,
No,
you
yeah.
guys still have a whole half a life left. Like, you guys got to realize no matter what age you're on, you can capitalize from this recession. No matter what age you are, you can capitalize from investments, whether it's crypto, whether it's stocks, whether it's real estate. You need to be able to sit down, learn the financial education it takes. And if you don't want to sit down and watch our videos, we do offer at Brotherhood Finance a free, yes, I said free, way that you guys can contact us that we can talk about how to capitalize the best for you in the way that you want to do things, right? So if you have X amount of money that you can spend, if you want to go in a certain niche, whether it's stocks, crypto, whatever it may be, we have the information that we can do that one-on-one coaching with you at a very, very small cost. So just a little plug, and Brendan, you can dive back into what you're saying, but I think it's very important because people overshadow how much time and effort it actually takes to gather all this information and deliver it to somebody, where we can deliver it to you in an hour, 2 hours, 3 hours, instead of you sitting here and watching, binge watching 48 hours worth of our content.
Yeah. And someone that pays a couple $1,000s for a college class, that's technically a fake teacher that's never actually, grown a business or understand economics. They just are a professor. I'm not bashing on them. I'm just saying, a lot of the things we spit, you're not going to learn this at a college or a university level. It's the same thing that our education system puts into place. They teach you what the government wants you to learn. They want you to become worker bees. They want, which is, fine for a lot of people, which is great. But yeah, Cole, diving back what you were saying into about stocks. So yeah, you have smaller caps, more risk. You have median caps that follow and track the S&P 500 that are more moderate, kind of like the VU, and then you have safe plays. So what are safe play opinions? Well, I like the dividend stocks if you're going for a safe play. So just to name a few, you have Walgreens, WBA, you have Pepsi. I mean, Pepsi literally, they do everything where it comes to a lot of food, a lot of drinks. They're actually in a lot, I actually, read an article too. There's about 5 companies that make up almost like 60% or more of all goods and services when it comes to like grocery store, stuff like that. So if you can really get into a safe play like that, even through a recession, if we are already in one, again, which I do believe we are currently, you can't go wrong with those stocks, because what are you going to do? Are you just going to save your money? No, you need to deploy it. Money is not good unless it's used, especially when, they're printing all this money. Now, again, diving back in, we've talked about, the different assets, what you can do, and some other additional information. Why am I saying that, you need to put your money to work? That goes all the way back to what we talked at the beginning of this podcast is inflation is 8.2%. Now that's CPI. That's not even taking into consideration of some things, because what they do when they get that CPI information is they choose special categories they want to generate that CPI from. Like gas is definitely up more than 8%. There's no, you know what I'm saying?
Yeah.
There's no way gas is not up more than
Yes.
8%.
What was
Diesel,
it?
just a multitude of goods and services. Lumber. Look at lumber, for example. Oh my gosh, Cole, if
Whoa.
you're talking about something that is outrageous, lumber. And that probably ties back into the housing of why it's so expensive now.
Yeah,
So
I mean, put it for an example. A perfect example would be for me. My family bought a house back in Florida, literally 6 years ago for 365,000. That same house right now is worth $910,000.
sheesh.
So you're talking a over 500% gain in just that alone. So I mean, it's absolutely crazy what's going on. I think we hit the nail on the spot. I think we told people exactly what a recession is, how we're going to benefit from this recession, not just me and Brendan, but everybody that is watching this podcast. And once again, let me know down below what you guys want to see. How are you going to benefit from this recession? What is your favorite asset vehicle, and how are you going to maximize your ROI return? But other than that, I think Brendan hit the nail on the head. And I think, appreciate everybody for coming out today and watching this video. If you guys have not yet, make sure to hit that like button. Make sure to comment what you're going to do to maximize your ROI. And Brendan, take it away.
Yeah, amen, Cole. I mean, that was a great elaboration. I think we definitely discussed a lot of things on this podcast that are very informative. If you missed anything, go back and watch it. A lot of information was spit. We went pretty rapidly through this. That way we can feed you the most information and knowledge possible in a short amount of time. Again, if you guys enjoy podcasts like this, with me and Cole really diving over certain sectors, make sure to leave a comment. That way we know. We only know if you guys tell us. So leave your comments down below if you enjoy podcasts like this, what you maybe want us to cover, any other additional information. But on that note, great job today, Cole. I think we covered a lot of things. Again, congratulations on you getting your Florida real estate license, brother. The sky is the limit. I'm very excited for you. And again, guys, I appreciate you stopping by Brotherhood Finance. Make sure to smash that thumbs up button. Smashing is important. Subscribe to our YouTube channel. Leave a comment as mentioned. And check us out at brotherhoodfinance.com and on our TikTok and Instagram. Much love, brothers. Have a good rest of your day. Peace.